Hitting 50 pips a day may sound difficult for most traders, especially in the Forex market where people keep on switching their strategies all the time. But the problem is rarely the strategy itself, it's almost always the trade entry. And 9 out of 10 times a clean entry creates money and builds confidence in yourself, so when your trade entry is good, the Forex market does the rest. So in today's trading video, I will show you my incredibly easy 50 pips a day trading strategy that gives sniper level entries and clear market direction without you needing to stare at the charts all day long. So I already got my charts ready, but before we get into the process, let me quickly explain why this 50 pip a day Forex trading strategy works so well, because in the first place it's logical, it's simple, and it's completely repeatable. But the thing is that this whole approach is built around institutional market direction and definitely not about the random scalping trades. And especially in this environment, you literally want to follow the money and not trade against the market. So when it comes to this approach, we also use the daily time frame because the daily price action literally shows a very clean market reactions and strong moves that have been created by bigger institutions. And what it does, it simply shows us where the real money actually stepped into the Forex market. And when you know the higher time frame, you already know the path that the market wants to take. So of course, instead of guessing your trade entries, you are preparing for the swing before it even begins. And of course, eventually, once the higher time frame is aligned with your overall trading idea, your lower time frame entry becomes extremely low risk. And I told you guys many times before in all of my videos that forcing the trades is never a good idea because I don't personally do it myself, so why should you? And when you are not forcing the trades anymore, because well, everything supports the direction of your trading idea, and this is why 50 pips becomes genuinely very easy to catch. Because what you do is you simply riding a trade that already wants to happen on a much bigger market time frame. Okay guys, so now let me teach you my repeatable Forex trading method. It's gonna be 3 simple steps and you cannot skip any of them. So step 1 is pretty easy because we need to identify the daily market bias. So we want to start on the daily chart and look for the last strong institutional push in the Forex market. So for example, I have Euro USD on the daily time frame, and this would be a perfect zone if we just gonna mark it like that, and I'm gonna explain you why. So as you can see, we have 2 candles that are clustering, so consolidating, and then we can see a strong institutional push towards the upside. So once we sort that out, we then want to find a pullback to that previous demand zone, which in this case, this would be the cluster right over here. And once we have a very clear supply or demand zone in this case, we always want to check the previous price move. And you should always ask yourself this: did the price push at least 50 pips? And if the answer is yes, that's perfect because that's the trade that you want to take. If not, you have to skip the trade. So for example, in this Euro USD example, we can already see that the market pushed at least more than 50 pips, which in this case 81. And guys, you should also skip the trade if the daily chart is messy, which means if you can't find the zone under 30 seconds or you start imagining one, it's probably not a good zone to trade from. And another pro tip that you probably want to write it down or save it in your noggin, that you should always trade with the market trend. So you should always check the weekly or even the monthly chart, and you have to make sure that they support the same direction that you want to trade, which means this gives you a stronger momentum when the price reaches your zone. Okay, so now that we have supply or demand marked on our charts, but supply or demand zone is not enough on its own, we still need to filter out the bad Forex trades in the market. And this is where confluence makes a huge difference because it literally increases probability and supports your trade idea. So the question is what you should always check. So besides the obvious one, which is the trend direction, you always want to look for a few key things. So first of all, we want to check the pivot points and where they are sitting in the current market structure. And let me tell you this, that pivot points get respected a lot, especially on on the higher time frames. So for example, in this Euro USD example, the pivot point is this orange line, which is the weekly pivot point. Now, of course, guys, you don't have to manually calculate the pivot points because it would be a headache. So I always use the indicator called pivot points, and you can easily find it on TradingView. So once I mark my pivot points, next I look at the round levels, which means a clean psychological price levels like 00 or 500. And trust me, the market really likes to react often to them. So in this case on Euro USD, there is one already, which is 1.1. I just have to make it like this, and of course the color is always bright. So as you can see, pivot point and a round level. And of course sometimes I will also use the RSI or stochastic indicator just for an extra confirmation. So these are the main things that I look on the daily chart, and once I have them all aligned, I then move into the step 3. So once we have all the confluence needed, we need to go and refine our Forex entry. So this is the final step, and this is the one that gives you a tight stop loss and big risk to reward potential. So when the price pulls back into our higher time frame zone, we then have to drop down to the 4-hour time frame. And this is where we have to look for a very clean and simple trigger to confirm the market direction. So on the 4-hour time frame, I always look for a few things. The first one would be a 4-hour rejection candle inside the daily zone. Then I also look at a smaller supply or demand zone forming inside the main zone. So for example, right over here, this would be a smaller demand zone, just like that. If I'm just gonna fix it, yeah, that looks perfect. And then I look for a clean break and retest setup or strong engulfing candlestick showing a clear rejection. But usually I will try to find a zone inside a zone, which I call big brother and small brother trading concept. And I have talked about this before in one of these videos right over here in these cards, so you can click and watch it if you wish to. But what it means is simply a smaller price action level hidden inside a bigger one, and this is the one that gives you the best Forex entries. So guys, when you're able to find this kind of setup, it literally gives you everything you need for a high probability Forex trade. Now, in this Euro USD example, you had two potential trading opportunities. So the first one would be on this bullish engulfing candlestick, because as you can see, the price managed to close above the round level, and also our stop loss covers the big brother, small brother trading concept, and it also includes the weekly pivot point, which is absolutely what I would love to see when I trade myself. Or you can also enter on this bullish engulfing candlestick closure as well, and I think this one would be even better because as you can see, we had a very small downtrend, but this bullish engulfing candlestick closed above it, which is also a great sign. So you can enter on this closure. When it comes to the stop loss, you can literally place it below all this rejection wick, but you also want to include the round level, weekly pivot point, and of course you want to place it below the daily if possible, or even the 4-hour daily zone, which would be more than enough. If you can cover the 4-hour demand zone, it's absolutely fine, because sometimes the daily zones, they are very wide. So of course you want a low risk and high reward entry. So if you can cover only the 4-hour supply or demand zone, it's absolutely fine. You are good to go. And then of course in this example, we can literally aim for this top right here, because as you can see, we have a pretty decent resistance zone right over here. So it would be logical to place our take profit target at this level. And of course, depending on your entry point, you will still get a very positive risk to reward ratio. So if you would enter on here, you would get 1.78. And as you can see, the target is 70 pips, which is more than 50 pips that we are aiming for. Or if you have entered on this bullish engulfing candlestick closure, then of course you can have a smaller stop loss, and then you can aim for that resistance level, which already gives you 2.88 risk to reward ratio. and potentially you can make 82 pips instead of 50. Okay guys, so now let me quickly show you a couple of examples to see how this trading strategy performs in real action. So the first trade that we're gonna look at is GBP Swiss on the 4-hour time frame, and I'm just quickly gonna run it through what happened and how the trade performed in the real market conditions. So as you can see, you can probably tell I have the big brother and small brother trading concept. So this big zone is the daily one, and then of course we have the smaller one, which is this box. So this one box right over here, because as you can see, we have some sort of cluster going on and then a strong institutional push towards the downside. And this move was definitely more than 50 pips. So 91, which is good. So once the price comes back to this level, we can expect the same momentum and the trend continue following the higher time frame bias. And I really like when my stop loss is being covered by at least monthly or weekly pivot points, or round levels. So as you can see, in this case, the orange line is my weekly pivot point and the white line is the monthly pivot point. And then as you can see, we also have a round level of 1.06000. Now, on the 4-hour time frame, it may seem that the price has already broken towards the bullish side. But then if you go to, let's say, even higher time frame than the daily, so as you can see on the weekly, the round level stands as a dynamic resistance because this candle right over here was broken towards the downside. And as you can see right now, it also rejects from that round level once again, and we have strong bearish momentum in the market. So as I mentioned, because we had that 50 pip move and we have a lot of confluence in this trade, the trade performed extremely nicely and dropped towards the downside. And as you can see, of course, this is GBP Swiss, so it's usually a very slow pair to trade, like Euro Swiss or Euro GBP. But as you can see, the trade performed really nice. It dropped 160 pips with a 45 pip stop loss. But as you can see, it was more than 50 pips simply because we have a lot of confluence and a strong directional bias from the higher time frames. And even here, if you entered where we entered, you can make 50 pips here, which was nearly 100 there, and then you can re-enter and again make a lot of profit just by following this simple trading strategy. And of course, guys, I really want to show you the both sides of trading, that sometimes I'm not winning all the time. Sometimes the strategy don't work as you expect, because in this case, this is the Swiss Japanese yen currency pair. This is the trade that I took with my VP members, and I had everything that I needed. I had the big brother, small brother, I had the round level, and I also had the weekly pivot point that covered, my stop loss. So everything is perfect. There was 3.560 potential, which is absolutely brilliant. However, as you can see, in this case, the trade, yes, it did reach around 30 pips, but no more than 50, and then eventually it did hit my stop loss. But the lesson here, as you can see, this small brother that I identified on the 4-hour time frame, it was already touched, which means this was not a fresh zone that you want to trade from. And as you can see, the price reversed. So when you're trying to find a supply or demand zones, you kind of want to have a very fresh level to trade from, which means there's gonna be a lot of orders accumulated in that zone, which means the institutional pressure and the buyers, they're gonna be there and waiting to push the price more than 50 pips, because it's way better to have a fair zone than the one that has been retested multiple times. But yeah, sometimes the strategies don't work. What's more important is that you learn from your mistakes and you try not to repeat them in the future trading.